You are listening to chartingwealth.com for Thursday, the 11th of June, 2015. Have you always wanted to know how the market worked and why? Well, at chartingwealth.com, we make it easy. You've come to the right place. Every day, we track the total market, the S&P 500, the NASDAQ 100 in gold. We show you what's happening in the marketplace and why with no hype. So all you need to do is sit back, relax, and learn how the market really works and figure out how to make your millions. Now, please be aware, we are not a stock calling service and we are not a financial advisory firm. Our opinions are our own and they're in no way to be taken as financial advice, investment advice of any kind. Now, let's jump into the market. What do we see? IYY is where we always start. That is a total market index fund. It tracks the entire market. The market actually hit its high back on the 22nd of May, reached a high of 107.98, almost 108. It has since fallen off. It fell off substantially. And again, we always start with our two-day chart. We start with a big chart. Our two-day chart shows substantial acceleration down on our two-day candle on the 5th and again on the 9th. We saw what's happened on the latest candle, that there has been a bit of a recovery. And when I say that, you have to understand the last candle that we have, the last two-day candle on the 9th, it had an opening at 106 and a closing at 105.66. Now, within that rather large range down, there was a bit of a move up on the candle that we have from the 10th. And it literally was a move. The last was 106.31, falling well within that substantial down move. We drew a two-day trend line on the 5th and the 9th of June, and that has not been breached on the two-day trend line. We're going to revert back here in just 1 second as I speak to the 4-hour chart, and you can actually see what happened over the course of the 10th. Actually, toward the end of the day on the 9th, there was a little bit of up movement in the afternoon, and then it accelerated up this morning. That is the morning of the 10th, crossed over going up on the 4-hour chart in the afternoon and ended the day a little bit above the two-day trend line on the 4-hour chart. Now, what does the 4-hour chart mean? It is not our trading, it is not our decision chart. It is a chart that we can use for action at certain times, but it does not make our trading decisions for us. You can see, however, that it's been a pretty good chart if you look back and backtrack like we talk about over the last month or so as we've entered into the summertime trading zone. It crossed over nicely between the 27th and the 28th. After the market had reached its previous high and went down from there, crossed over again nicely. We're talking about the MACD in particular going up, and that was a nice climb up. And then the last down movement, it crossed over on the 26th or so, moving down, and is tracked down nicely. It crossed over going up on the 10th, and toward the end of the day, also the derivative oscillator lost a great deal of its speed very quickly as the market surged up, and it is crossed over going up. Now, what does that mean? Does that mean that the market, we should cancel all of our down trades or jump in right now? Well, it means that we will look at that with great care. Why? Because it has only happened on the 4-hour chart, and the 4-hour chart does not make the big chart. I want to pay attention closely on Thursday the 11th just to see if it's going to back off and continue its down move on the big chart, or if it's going to continue to gain steam. Now, let's range out on the two-day chart once again. Go over to SPY. It actually was up 1.20% today. Looks very similar, as does IYY. Two big down candles on the 5th and even more on the 9th, and a bit of a recovery sort of in the middle of the candle on the 9th today. Not a doji. That means it's not a cross, but it's not a great move up. There was a fair bit of down movement, a lot more up movement that the bears were able to push down. The bulls wanted to drag the market higher. That did not happen. Now, Let's range out on the S&P, and again, it'll probably track somewhat similar, and it does. Tracks a little bit similar to the IYY. Remember, the S&P's 500 big companies. The total market is just that, the total market, but the big companies have so much of the volume that you tend to see both the charts look very similar. It's always interesting to add all those other stocks in, though, and see what's really happening in the broad market. You can see that if you were looking at the chart, that it crossed through the 30 and the 34 moving linear regression lines. Sometimes those can act as either ceilings or floors for us, and it pushed through the 2-day trend line, crossed over going up. This afternoon, again, on the 4-hour chart. The 4-hour chart does, again, not make a big chart necessarily. Now, let's range back out and see what the Qs have been up to. The Qs actually doesn't show nearly as much of an up movement, although it was up 1.37%. The Qs were up 1.37%. Again, remember, the Qs are technology, represents the NASDAQ 100. Excuse me, those stocks. There's actually a pretty significant divergence in the 2-day chart. For the 2-day chart, the derivative oscillator actually got bigger today. That's something to pay attention to. Now, if we revert out to the 4-hour chart, you will see that it has not crossed over going up, and there's not been a cross through on the 4-hour chart of the 2-day trend line. We always pay a lot of attention to the trend lines because they can give us real actionable information that a trend that we were tracking, particularly when it's a good trend. Now, we prefer to have trends that connect 3 or more candles. When they don't, then we pay less attention to the trend line. Here, we do see that we've got the trend line that has not been broken, unlike on the IYY, the total market, and the S&P 500. So, technically, we have a bit of confusion as far as where the SPY and IYY are when it comes to the 4-hour chart crossing over going up, and on the 2-day chart, both of those are still in down moves. So got a little bit of confusion there in what's really happening, and again, we'll hold with the long chart before and unless we see that corrected. IYY is a little, the Qs is a little different because the Qs, we don't have a breaking of the 2-day trend line, and on the Qs too, on the 4-hour chart, we don't even have a crossover going up on that chart yet. So we'll continue to monitor that. Confirmed down moves still in the Qs, and a little bit of schizophrenia in the total market and the S&P 500. Now let's go to gold, and before we look at the 4-hour, let's go to the 2-day. Gold is, again, losing a little bit of steam on the derivative oscillator. We're seeing a bit of converging that is coming together of the MACD. Gold has been in a confirmed down move on the 2-day chart since the 26th or so of May. It has broken through the 2-day trend line, but we don't have a crossing over going up yet on the 2-day chart. Now, when we track the 4-hour chart, we see that it has crossed over this morning, passing through the 2-day trend line, and then it started to cross back through before the day was out. We do have a crossover going up as of this morning on the 4-hour chart, and we have a crossing over the 2-day trend line this morning and then back through it this afternoon. What does that mean? Well, that means, again, we continue to stick with our big chart, which is in a down move still for gold. So that is where we end the day on Wednesday, getting ready to move into Thursday, the 11th of June. Pay close attention to the markets. Make sure that you watch what's going on. See if any of these 4-hour chart changes have any real impact on the 2-day chart, which is, of course, 4 times as large as a half-day chart. They don't always. Pay attention to the MACD, the derivative oscillator, and that price movement. We wish you the best in your trading. Thanks so much for joining us. We love to hear from you. If you've got questions, concerns, or comments, please be sure to let us hear from you on Facebook, on Twitter, or make comments right there on our website, chartingwealth.com, right there on your screen. We love to hear from you. Thank you so much. God bless. Wish you the best in trading here at chartingwealth.com.